Hello everyone, welcome to today's video. 2023 is really not a good year for stock market and stock market investors, and we are all seeing our portfolio in red, right? You are not happy and even me too. But this is surprisingly predicted by a farmer in 1875 that 2023 is not a good year of stock market, but there is a ray of hope. So we will be discussing today an interesting story and an interesting cycle or a system that has been working exactly or perfectly well for so many years, and how we can connect that cycle in today's market and understand about how the stock market is going to move forward from here on. This has been released by a person named Samuel Benner. This is a very simple farmer from USA, and he is a farmer, so he is into weather forecasting and how the crop harvest is going to come out. So he had made a cycle or a system that shows that every 10 to 12 years there is going to be a fall in the market or fall in the crop market. So the prices would tank and he would not get proper prices for his produce, and there is no much demand. Why this happens, you ask me? It is very common in any market that there will be a period of high supply and low demand, then there will be a period of more demand and low supply, right? So that is a very simple working of economics and how the market works. So according to that, this person had made a graph or a cycle that shows which year the market is going to go up and which year the markets are going to come down. So this market or this system has been working very well even in connection to stock market. So as you know, previously in the world, stock market or entire market or the country itself was completely linked to agriculture. So how the agriculture moves is how the economy moves and sustains. So this system was working very well back then, but even in today's technology and even in today's day and age, this system is showing a real working culture. So I want to discuss about how this system can affect us, and do me personally believe in this, and why I have some things to add on to the system so that you understand it in a broader sense. Let's get to the root of it. Before I start the analysis, I want to just tell you another one story. So people who are following football and who is interested in football, they know about octopus named Paul the Octopus, right? He is actually one of the most highly rated person or rated animal to predict the winner of the World Cup. So you ask me how it works and how it is actually to be believed. He has not very less of a fan following. He is actually a person who have predicted the World Cup winner at an accuracy of around 87%. So even though you ask me how this works, it have no science. He is not watching football. He do not know about the game. Then how did this happen? This is just a game of luck. He is just like an animal. He sits on the a game or on the paddle which he likes, and surprisingly well, that is the team who wins. But you ask me how this system is same like Paul the Octopus, I would not say that is correct, because this system is actually backed by science. There is an element of the research and system that has been seen in the world and how the world functions. But how this system is going to affect us in today's world, that is what is going to change, because today's world has changed a lot from what was happening previously. Now if you check, the world is driven by tech. Last 2.5 decades have been exponential in terms of tech, and how tech is culturing a generation, and how the world is changing very rapidly because of tech. So in this world, if you think about just a system that is built on the basis of crop harvest and weather forecast, it should not work perfectly. Now let's just see about this system. I will put out this graph here so you can see, and I will just show you. So if you see in this graph, you have seen that 1927 is going to be a fall, and that is for the Great Depression. It's very famous. And then 1945, that is the World War period, and 1965 and 1981 is all high interest rates, and there was a Vietnam US war, and there was so many bad events happening back and back, and US economy itself was very down. And then comes 1999, and that is the dot-com crash. and then there is 2019, that is slightly off, and it should have been 2020, and that is the COVID crash. But now you are seeing that there is all these major crashes or major economic difficulties being recorded perfectly. But you will be asking me, where is Lehman Brothers crash of 2008? And that is exactly what I want to discuss. And that is the reason why this model is not very perfect in today's market, because Lehman Brothers crash is entirely, or in my opinion, a big reason of that is race of government to print money. And you ask, how do I understand that? For that, we need to understand the concept of M1 money. M1 money is a very simple thing. It is the amount of free float of liquid cash in the market. So liquid cash means every person have cash in hand. So if people have cash, more cash in hand, what happens? The things get expensive. The things get expensive because people are ready to pay more to get it, because there is no exponential rise in the amount of products in the market, but the amount of cash balance have increased a lot due to printing. And because of this, there is the system of inflation. Any inflation and any difficulties we are facing in today's world is actually the base reason that why this inflation is happening. Like, when there is huge amount of money printed out, obviously it will result in inflation. That is the basics of economics, because today's world have changed a lot. It is dependent on tech. The governments have changed a lot from previously taking money in terms of moving away from barter system to today money is a power play. Money is for the rich. Money is for the people who are in power. So who is getting crushed in this system? That is the middle class. That is you and me. That is the people who are going to work for salary. So whoever you are, if you are working for salary, you are in the brink of a difficulty, because as inflation rises, the products or the market or the things in the market prices will rise. But what will happen at the end of the day is we will not have our salary rising at the same level, and that's where we will find it difficult. But the benefit of the rich people is, in economics there is a concept of LLC, right? That is land, labor and capital. So any rich person, normally he is having LLC, that is land, labor and capital. So what's the benefit, you ask me? As the prices in the market increase of the commodities due to inflation, obviously this person who is rich, he's having land and he's having labor and he's having capital all. So his land or his rental properties, his actual property value is going to rise. That is how the system works. Whenever there is inflation, normally we see the inflation in our daily life, in our daily products we buy, but the root of the inflation would be happening in the property market, in the stock market and every other places where there is huge rise in the prices and it is not affordable for us. So who benefits from this? The rich people who owns it, right? These people who have capital of land and he's having rental properties, if the inflation rises and his expenses increase, his income also rises because of the rise in the rental yield, in the rise in the property prices, and obviously he is safe. And that's how the world has worked very long, and it is going to happen even more in the future. That is why when I see such system, my mind always goes to, actually we are all expecting in the future, we middle class people, we work hard, we put in a lot of effort, we have education and we become rich class, right? We have that expectation. India is hoping that. But in my opinion, what would happen is this rich and elite rich people, they are going to be a smaller part of the society, and the larger part of the middle class is going to get eroded and go into the poorer class. Why I'm saying this? If you check at the average income of an Indian in 2023, it is around 24,000 and 25,000. So let me know, if you think, if you are getting 25,000 rupees, do you consider yourself as a middle class or you consider yourself as a poor? Because in today's world, 25,000 rupees is not enough for sustaining a family. It's not enough for a person having any hope of the future, like to live in the future, to sustain in the future, 25,000 will not help you do that. So if the average income of an Indian is 25,000 rupees, we are seeing a significant amount of rise in the poor class in the future. So this is going to rise up every single year. What I am thinking is the inflation is going to eat up. Now maybe the 25,000 will become 30,000 next year, but the inflation actually value would be now maybe 22,000. That is how the world works, and that's what we need to try to get away from. I don't say this is easy, but if you choose the correct stocks, if you choose your investments right, at least you have a good chance of building a corpus that is enough for you to sustainably relax and to retire in your future, and you will not have difficulty in moving ahead with the time. Because if you have good stocks in your portfolio, if you have good real estate investments, that really do help, because that is how the rich people stay rich and we poor people stay poor. That is the basics of it. You need to have investments working for you day in and day out and make you money even when you are not actively trading your time for money, right? Third part of this discussion, what I want to discuss is which stocks me personally I would recommend, or I am not giving stock recommendation, but I am giving a sector recommendation and investment idea about what type of investments would you make in today's high inflation market and how you can benefit from it. So the first type of industry I would say, avoid high debt companies. High debt companies will obviously at the end of the day, at the end of the tunnel, they will face a difficulty in making a lot of money, because they will at the end of the day face difficulties in paying off this debt. Either they will fall down in prices of the stock, or either they will not be able to make profit anytime soon or sustainably well. And that companies, you might take a gamble when the market is good, market is highly positive and you are having a lot of income. But when you are planning to retire and when you are planning to keep these stocks for long time and to invest and stay invested with a conviction, these type of stocks are not good. And the next type of stocks what I would avoid is startups. Startups are good, but startups are entirely driven by high valuation and high pricing that is really not sustainable for a regular investor like us. The next stock is what I would suggest you to take a look at. That is the stocks which have pricing power, that's having pricing supremacy. That's what I would say. And that are stocks like Apple, that is stocks like HUL, because these type of companies, even if they rise their prices, the people are going to still buy it, because there is an urgent need in the market, there is urgency in the market, and people cannot just skip away. They are all essential products, and companies like HUL, even if they are facing higher manufacturing cost, they can pass on this cost to the people, and in turn the company will be safe and the stock would be rising. And companies like Apple, which is luxury brand, which is luxury product, and they have positioned themselves as a big player and strong player, they do not need to face that much difficulty, because the market is obviously going to go behind that too, and they have pricing power and they can charge whatever they need, and people are going to have a market for it. So these type of companies are good. And then there is the companies which have manufacturing supremacy, that is they are the market leader, or they have the manufacturing capability that no other player is going to have. Even if a new player is going to come into the market and give a better product at better price, still these type of players will be very safe, because they already have a higher market share, also they have higher manufacturing capacity, so at any cost they can give lower than the new player. So these are the companies like Pidilite, these are companies like Asian Paints, who are the leaders in their own sectors, and any player cannot beat them in terms of economies of scale and how the manufacturing system works. So that is what we need to focus on. And then the next would be banking sector is really good, for the reason that banking is the root of a company, and actually in my sense banking has already gone through a lot of ups and downs, and now banking is at a good price and good system. So if you want to invest for the long, try to invest in banks which you trust, which you have invested your own money, and you are seeing their financials and feeling strong good emotions about them. And these type of banks you can invest, because banking sector is seeming to be a good one looking in the future. But also take care of your money, because it is important that you need to have cash in hand. So do not invest in things that you don't find actual value in. Just do not have the FOMO of not investing. Invest in things you find actual value. And if you are able to not find that type of value, invest in the mutual funds or indexes like Nasdaq. You can invest in ITBs if you are trusting on the IT sector of the country. Now the tech is moving forward. Tech stocks are available at good discount. So these type of stocks, if you want to invest, you can invest in ITBs, and these type of Nasdaq to invest in the stock US tech side. So these type of investments are more easier, because you don't need to think which company to choose. It works out quite well in the long term. To be honest, there is no actual panic in the short term. I am talking to you all about these things in such high regard is mainly because we as the normal citizens, we need to have the idea about what's happening around, but we do not need to panic, because the market is actually at a very good price now, at a low end now, and now the market is expected to move up. So we are actually at the end of the positivity, so we are going to come up now. So we are actually having a good time ahead, but it is not happening in 1 year or 2 year. It is going to happen in 5 years, 6 years, 10 years. So that period you need to give them, but in that period you will see a huge rise in your portfolio. The last year is really not good. It is actually giving negative returns of 6%, and along with inflation it's really hard. But as you know, stock market investing is not just for 1 year, but it's for a long period. So if you give it its time, you are really going to see your money work out and make a lot of money for you and help you retire in the future, right? So I hope you all enjoyed this video of connecting economics and stock market and how it will affect us normal Indians. And these type of videos take a lot of effort and research, but I would really appreciate if you can give a like to the video and do subscribe and share it with the friends. So that's it, guys. Thank you so much for watching the video, and hope to see you again in the next video. Bye for now.